Mic check 212. Mic check 212. I think that's New York. Yeah, I think 212 is New York. Welcome back to the Solid Fight. Man, get out of here. Welcome back to the Solid Report show with your boy Sam Solid, aka Sam Badawi, aka Bag Holder. We are here in the stock market again. We are not streaming through my channel. We are streaming strictly through the Wolf Financial channel. If this thing craps out in the middle of it, then it is what it is. But the markets are doing a lot better today. Wow. Didn't mean for that to happen. Hold on. Here we go. Okay, I got it, guys. I got it. Right. So here we are in the stock market, and Meta is killing it, obviously. These are from the earnings yesterday. Microsoft is getting killed, courtesy of the thumbnail. In case you guys saw it. Yeah, that's a beautiful thumbnail. That's a beautiful thumbnail. In case you guys don't recognize that thumbnail, it's from the it's that character. I forget the name of the guy, but he was in Bridesmaids, Mad Men, and stuff. And he has the hey, wait, let me hold on. Let me explain, sort of thing, or hear me out, sort of thing. And yeah, I mean, Satya Nadella has a lot of explaining to do. So we'll see. No, I don't have a private Discord, man. I don't have a private group. I don't have a private Discord. I just basically am here for you guys, telling you ask me any questions, I'll answer it. No problem. Not here to sell a Discord service or anything like that. Or I don't know. I'm not planning on it right now. I just want to provide the live feedback on my market thoughts and what's happening in real time. Because to be honest, things are happening so fast. Might as well just give it to you guys on a cake platter right now. But yeah, I'm not on my YouTube channel. I'm just on the Wolf YouTube channel. So this is the at Wolf Financial YouTube page. If you're on Twitter, head over there, guys. Like I'm telling you, there's so much content on the Wolf Financial site, plus a lot of shorts that we're all throwing on there, plus a lot of videos and live interviews with Gav Blacksburg, who's the CEO of Wolf. Does a lot of live streams with a lot of high-profile guests and stuff. I would say check it out. Go on there, and you can comment on the shows, like and subscribe. Shows us a lot of support. If you guys do that, we'd really appreciate it. I'm just like literally at awe of just Microsoft just down so much. And we're going to get into it. We're going to get to the reason why Microsoft is now almost a $3 trillion company again. And exactly like what happened during the earnings. It was more than a few things. I think a lot of it is less of a Microsoft problem. But I think the one thing that people are selling Microsoft over is a lot of momentum, right? So you have a lot of momentum stocks that are being chased upwards. And Microsoft obviously is not one of them. It's been pretty weak for quite some time. So what we're going to go over today's show, we're going to go over a little bit of the earnings from Microsoft and Meta. We're going to look into Tesla for a little bit. And then we're going to look at ServiceNow. Like what in the world happened with ServiceNow? Why is it down? I think it's down, 12% right now, which is pretty crazy. We're going to go over other software stocks. I know you guys are asking about Rubrik a lot, so I'm going to go over Rubrik again. I went over this many, many times, and I'll say it again. This is not a Rubrik problem. This is a software problem. All the sell-off we're seeing in software right now is just straight up fear that AI is going to kill software. And the question is, should you buy the dip or not? I'll give my thoughts on that one later if you stick around. And we're also going to go over the rare earth sell-off, critical minerals, also MP, UUUU, USAR, all that stuff is selling off because the government basically backed out and said there's no floor on the price of a lot of these rare earth stocks. So that sold off. It did pick back up a little bit yesterday after MP called it fake news because it was from Reuters. It wasn't like a press release from the White House or anything. It was just from Reuters. So, and Reuters is like back and forth with that, but there was a little bit of stuff that got uncovered with basically MP's thoughts. Am I in Stock Talks group? I am not in his group, but I am in his Discord. So I go around there throwing lots of memes left and right, joke around with those crazy cats in there. But no, I'm not a part of it. I'm in a lot of Discord, so I'm not really there to like pick up follow anyone's portfolio or anything. They have great ideas. But I would say that StockTalk has a very good methodology. I would actually like to have him on here just to discuss that in general. I mean, everyone knows, the picks that he's had, which has done amazing this year. But the methodology, I think, is really the crux of his success in there. And it's very interesting to see that in real time. Yeah, copper it up. Oh, wow. Metals are just still on a tear. Hey, wasn't it like the last 3 weeks people are trying to call the top in like gold and silver, and gold's well, actually it was at the high day, but gold's move, 10% move, is literally the market cap of 2 times the market cap of Bitcoin, which is crazy to think about. Like, I cannot believe gold is making this crazy move. If you said to yourself, I'm going to sell all my Bitcoin and buy gold, you would have basically quadrupled your money in just the last month alone. Basically, if you did the opposite that Robert Kiyosaki did, you'd be up massively, but unfortunately that was not the case for him. I mean, can't really win them all. But yeah, copper is just, oh, wow, that was a pretty decent sell-off of copper today. But arguably, silver is just ripping. Remember when we were talking about this before, guys? Right over here in the silver chart? Look at this. Look at this. Like, don't short, like, don't, unless you got a death wish, don't short silver. And finally, we're also going to talk about memory stocks. Oh, wow, I wasn't even sharing my screen. I mean, it's all good. You guys are already seeing it anyway. We're going to talk about memory stocks. SanDisk reports today after hours, and I believe Apple also reports today after hours as well. By the way, mic check, guys. Let me know how my mic is sounding right now, if I'm too loud, too soft, if I should fix things. Apple reports after hours today. Western Digital reports. KLAC reports, which is also similar in the same sector as ASML, AMAT, LRCX, and so on. Stryker reports today. Visa reports today. And yeah, I think I already got SanDisk. I already mentioned. Yeah, so we got some big people reporting today. Lockheed Martin actually reported this morning. They're up about 5%. Wow, it's so funny because Trump was just talking crap about this, brought Lockheed Martin down all the way $500, and here we are at 628. Phenomenal company. Lockheed Martin is becoming a massive player in the defense industry. But we will see what happens. I think Bitcoin is going to the 70K region. Sure. Wow. I mean, I really would not be surprised at this point. Let's take a look at the crypto chart real quick, and then we'll get into the show. We got Bitcoin over here. Yeah, it's making new 2026 lows. The low of 2026 was really just a few days at 86K, and then it bounced to 90K, and here we are back down again 6K. Ethereum is really at the bottom of the range here. Like, it needs to be saved. Ethereum needs to be saved. These are not. Oh, this is actually very near the lows in November for Ethereum. So Ethereum is actually underperforming Bitcoin. If I look at the Ethereum Bitcoin chart, which basically shows the strength of Ethereum over over Bitcoin, it's been underperforming Bitcoin for quite some time. And then, of course, you have your altcoins here that are massively underperforming Bitcoin. Doge is underperforming. Solana is underperforming. XRP, where's XRP? It's back under $2. This is actually, XRP is now making now hitting the same lows from October. Like, guys, this does not look good. And if you bought MicroStrategy thinking that was the bottom, like, you totally got your face ripped off to the downside, of course. So I'd be very careful buying a lot of these crypto stocks, crypto companies. Oh, wow. Who's this? Amit DBs? I don't know. Is that Amit? I don't think that's Amit. I'm getting trolled. I'm getting trolled by someone right now, but it's all good. Oh, what's up? What's going on, man? How you doing? How you doing, Mr. Stock Market News? Guys, shout out to Stock Market News. Like, this guy has been on Twitter going hard since like 2020. I've been following this guy since 2020, and I did not think that I would have the opportunity to work with him. But kudos to Evan. Yeah, no, he is bag holding BM&R. So, he's right there with you in the tool shed. So good luck to you guys. I mean, but hopefully you guys manage your position sizing, didn't like go all in or anything. I'm sure a lot of you guys didn't. Just a preface. I mean, a lot of people that I know that have bought BM&R like didn't full port or anything. So it is what it is. No, I'm not going to answer that question. I'm at DB. All right. Do you think Apple dumps after earnings like Microsoft? I don't know, but if Apple dumps after earnings, guys, we are going a lot lower in the stock market, a lot lower. Let's actually take a look at the chart of Apple real quick before we get into the show over here. Wow, this is we are not getting above the 20-day moving average in Apple. This is not a good looking chart at all to come into earnings. It's like right there, the 20-day moving average on the EMAs. Yeah, it's like it's above the 21 EMA. No, it's below the 21 EMA and it's above the 9 EMA. So that's not exactly that great. It's below the 50 EMA. This is not looking good into earnings. Shoot, I might have to hedge into these earnings. This is ridiculous. I don't know. We'll see. We'll see if I'm going to hedge into these earnings. But the Qs, I mean, it's reclaiming a lot of support here, right? Like, it doesn't look like it's overall bearish. And the Qs were down pretty considerably this morning. But look at this. We're recovering all the moving averages on SPY. We're recovering all the moving. It's like, I don't know. Maybe I should hedge, but I'm probably not going to hedge. I mean, the other stocks are making quite a bit of recovery. Critical metals got hit pretty hard, like I said. Materials Corp or MP Materials got hit pretty hard. Like, all these got hit pretty hard. So we're going to look a little bit into that stuff, guys. But thank you very much, all 33 of you people, for showing up. Really appreciate you guys. No, he is not Stock Talk Weekly. He is Stock Market News. Stock Talk Weekly talks about stocks on a weekly basis, apparently. But yeah, so let's get into the show, guys. Now, what happened during the earnings yesterday? Meta is back at $730. Microsoft is basically flat or down for the last year. And Tesla is trading near all-time highs. And really the story is Microsoft is more of a software company. So that's just an excuse to hit this company. Azure grew 39%. Let's actually take a look at some numbers over here real quick. For Microsoft, I'm actually going to play a clip for you guys. You know what? Let me just play a clip for you guys real quick first, guys. And then we're going to get a little bit into some details. All right, I got that open. Here we go. Here we go. All right.
And Microsoft, as those stocks are moving right now in opposite directions. Joining us now, Brent Thill from Jefferies. Brent, great to have you with us. I want to tackle the decline that we're watching in Microsoft shares right now. What's behind it? Is it the Azure growth?
Software's like Rodney Dangerfield, no respect. It is incredible. The Microsoft numbers were stable. Azure, Office 365, many of the numbers were just, right in line, and it wasn't a blowout. The backlog's really good, but I think this disclosure that OpenAI is 45% of their backlog, it goes back to the situation where can OpenAI achieve these financial goals to pay Oracle, Microsoft, and many of the providers. So I think there's a number of factors that are working against Microsoft. We like it. We think it was a clean quarter, but I think many of these overhangs of is AI going to pay off? And can OpenAI follow through and pay these balances is still in the wings. We think OpenAI will. We think the hatred towards OpenAI, it's shocking to me. It's like Google in Q1 last year when everyone thought Google was done because of AI and what it was going to do to their search business. And I think that the same thing is to be said about OpenAI.
Tell me you don't have stake in OpenAI without telling me you don't have stake in OpenAI, man. Come on.
Like they're not in the position that investors think that they are, in our belief. So,
okay, I don't like this. This is very biased. Very biased. I want him to go over.
Happening. We saw the same thing with Google at the beginning of the year. So Microsoft, again, I think pretty consistent. And I think the challenge for Microsoft is really what's going on at Meta, at IBM. Look at the numbers at those companies. Meta blew out the revenue number. The guidance in the top line is incredible. The expenses are higher, but they're not as bad as everyone feared. And so, again, you have a company that can do $30 of earnings power, 30 multiple gets you $900 on Meta, pretty easy. And you don't have the open AI overhang. So I just think it goes back to software doesn't have the catalyst because there's so many inflections that are happening outside of our group in other names like Meta, Amazon, Google, all the all the energy names that we cover.
Thanks. Brent, we want to get back to you. I mean, Steve was sort of underscoring the point that you're making in terms of the concentration of the backlog, and that was the problem with Oracle. It's a very different story, though, in terms of Oracle and Microsoft, right? I mean, when we're thinking about the concentration of the backlog, what can you tell investors who are worried about that concentration?
Yeah, for Oracle, it is a big percent of their backlog as well. And what I'd say is that Oracle and Microsoft are two completely different companies. Microsoft's margins are going higher, and Amy Hood has done a great job as a CFO managing and improving margins, holding double-digit growth. And Microsoft is a more diverse business. They have an application business, a security business, an infrastructure business with Azure. You know, they just have more oars in the water. And as we've said, they can monetize AI better than any software company because they've infused AI through each of those layers. And Nadella has done a phenomenal job of leading this. Oracle's coming from behind, right? Mm-hmm. They needed this $300 billion deal with OpenAI to get on the AI map, and they got it. And it's a great win for them. But Oracle has more potential, in my opinion, a few more hurdles to go through. So I just say, like, Microsoft is always, in our belief, been a more diverse story. Oracle, I think, is also probably underloved and overkicked short term on the fear of OpenAI. Yeah. But they're both swimming in the same pool right now, which is no one's believing that OpenAI can follow through with these commitments. And I think that we're going to be shocked that they probably will be able to. So then these stocks should effectively over time go higher. Yeah, I mean, to your point, Google and Amazon have vastly outperformed the OpenAI complex, however you want to define that, Microsoft, Oracle. Real quick word on Meta, though, Brent. You mentioned it kind of looks good in comparison in many scores. Stock is up. I guess we were ready for the bigger CapEx number?
All right, so I want to get a little bit into Microsoft's numbers over here. Let me share this screen right here. Okay, so we have revenue for Microsoft came in 16.7% year-over-year growth, which is actually really good. It beat consensus at $80 billion. Intelligent Cloud beat, and that grew about 29%. Intelligent Cloud is not Azure. It's quite different. Hold on a second. Yeah. Intelligent Cloud is quite different from Azure. Azure actually grew 39%. Intelligent Cloud is a makeup of a bunch of other products as well. So that's not the one you want to necessarily look at when you look at that number. Operating income grew 20.9% year over year, which outperforms revenue, which is good to see. That means they're becoming more profitable. They expanded margins here by 164 basis points, which is good to see. And EPS did beat as well. But like, what was the issue here? Well, I mean, there's a couple of things over here that could be issues, but I wouldn't really say are really bad things. I mean, they did reduce their CapEx, which is pretty interesting to see that they are the second largest hyperscale in the entire world. But like we were seeing on the previous, on the video we were watching, is that Microsoft has about 40% of its RPO from OpenAI. And we saw what happened with Oracle when they revealed that information. You guys can't personally see it, but they're the CDS spreads for the bonds for the insurance on the bonds for Oracle are pretty bad. And I'd imagine Microsoft will probably get hit a little bit from that. And ultimately, the insurance that big bond buyers of these corporate companies or corporate bonds take is going to tell the story as to how comfortable they feel about owning the bonds, right? And if those rates go up, that means that there's not that much bidding for these corporate bonds, which means a lot of people don't necessarily believe that Microsoft will pay their debt. Now they're going to pay their debt. It is Microsoft, but I think the fear is that people think that OpenAI is not going to come through with a lot of revenue that they promised, is not going to come through with the profitability and so on. There's that disbelief, and anything that touches OpenAI is cold, right? So we talked about yesterday how anything that touches Anthropic is gold. In this case, in the other side, anything that touches OpenAI is getting sold off. And Oracle is trading near its lows. Microsoft is trading near its lows. And I think this story is going to keep happening. And yesterday it was actually pretty interesting. You just saw news that there's a 60 billion. There's NVIDIA, Microsoft, and Amazon are in talks to raise about $60 billion in terms of an OpenAI valuation. That's $730 billion. why is everyone putting so much money into OpenAI? Now, I don't think OpenAI is going to fail. I think if OpenAI does fail, we got a lot of problems that we're going to be dealing with. I think that we are probably going to see the top of the stock market if OpenAI does fail in the near term, right? But if you have these other LLMs continue to expand and grow in popularity, which is Google Gemini, which is xAI's Grok, Anthropic Claude models, and so on, and they start taking a lot of market share from OpenAI, then maybe it'll dampen that effect of OpenAI going under. But I still think it's too big to fail, and I don't think they're going to fail. If this whole AI stuff is really true, which I do think it is, I don't think OpenAI is going to fail. Again, like if OpenAI fails, guys, I think we're going to be in a world of pain for at least a couple of years, because it will be a domino effect downhill. There are too many hands in OpenAI, namely with Jensen Huang, Microsoft, and so on. And it's like a combined market cap of like $8 trillion, NVIDIA and Microsoft alone. So if OpenAI, SHIT's the bed, we're going to be in a world of hurt. So I'd be very careful. Now, Meta had very good earnings. Let me actually pull that up over here real quick. Meta had very good earnings. No, that's not the one I'll pull up. This is the one. I'll go ahead and share my screen with Meta. Yeah, so Meta had really good earnings, and really the biggest part about this earnings, by the way, shout out to Consensus Media, Consensus Gurus. They're the ones who create these beautiful charts. They beat the top line, they beat the bottom line, and they really beat the bottom line. The revenue for next quarter is projected to be 30% growth, and that's just the midline of the range that they gave. They gave $53.5 billion to $56.5 billion for just next quarter alone. So 55 is the midline, that'd be 30% growth. So we're anywhere between 27 to 30% growth. And on top of that, they showed this quarter that they're at 24% growth, right? So without a doubt, even if they didn't hit the upper end of the top line, if they went for the bottom of the top line, they would be re-accelerating growth. And what is one thing that I've talked to you guys about ad nauseum on this channel as to why stocks go up? Well, stocks go up because, hold on, I was just taking a look at something real quick. I wanted to see if the market was dumping or not, and it's not. So thank goodness it's not dumping. I don't want to end this show on a low note. I promise I won't end the show on a low note. And if it does, I mean, so God help us, guys. But right. So what did I always say is that stocks go up because they accelerate revenue or they accelerate profitability. Okay. Obviously, there's catalysts behind that. There's secular trends behind that. So you want to be part of the big secular trends. You want to basically ride the themes and so on, because right now the theme is not software. So software, ironically, ServiceNow is doing just fine. We'll get into that in a little bit in the next segment. But with Meta, yeah, they had a couple of one-time things that basically hit their operating margin last quarter, but the story is still intact. They are utilizing AI to advance their family of apps advertising revenue, right? They said that on the earnings call. Advertising revenue accelerated and beat estimates. That is literally the crux of their business. And if they're accelerating, then the company is going to do just fine. And that's why you're seeing it here. It's up 10%, right? So I'm a Meta shareholder. It's a bigger position now, thankfully, than when it was $600. But I'm going to leave it the way it is. I'm not going to bother adding to it. Very happy with it. This is going to be an $800 stock if the market stays bullish, like without a doubt. I mean, you went from very terrible sentiment, much like Google did back then, to amazing sentiment. Everyone's like, I have to buy Meta now. And you have like that. People are on one side of the boat where they're all bearish Meta, not you guys, but people in general were bearish Meta. That's why it went to $600. To now they're all of a sudden they're bullish. That's when like you get a massive rush and FOMO into just buying the crap out of Meta. And the stock is up 10% today, while the NASDAQ is down 1%. NASDAQ was down over 2% earlier, which is just crazy to think about, because it's like they seriously have bought this dip. But yeah, I mean, I'm not selling Meta. I don't think Meta is a good idea to sell. So now the question is, what's going to happen with Amazon and Apple and Google, right? So we'll see what happens with those. For one thing, I'm bullish on Google and I'm bullish on Amazon. I think Amazon is still trading at more attractive valuation. It's actually trading at a cheaper price to operating cash flow on a forward basis for Amazon now that Meta's up 10%. But arguably, I mean, Amazon's operating margins at 36% for AWS, and they have a large advertising sector as well. So, we'll see what happens to that one. I'm bullish Amazon to the earnings. Now, how high is it going to go or where will it go? I don't know. But I'm bullish the fundamentals of Amazon. But, to be honest, if the market falls off a cliff here today and continues, then like all bets are off. So that's my take on it. Tesla, if you're buying Tesla because you're hoping that their revenues are going to go up, like just sell your stock. Like Tesla will never, ever, ever, ever be fair value. Like, I'm sorry, Tesla will never be fair value. So let me actually share an earnings snapshot from Tesla. And this is just ridiculous, guys. Like this is absurd. They're declining revenue, 3%. The gross margins are a little bit higher, which is fine, but they're mostly a car company right now, so that's not really going to happen. Adjusted EBITDA, they're switching to adjusted EBITDA. Like they're a mega cap company switching to adjusted EBITDA. Like that's crazy at this point. Their adjusted EPS is still shrinking. Their free cash flow went down 30%. Their CapEx decreased. Arguably, still they need the CapEx anyway. Operating cash flow decreased 20%. They're decreasing profitability. This is the one company where they are against all odds. You do not buy Tesla because you think they're going to return a positive cash flow, because you think they're going to accelerate. You're buying Tesla because of the future, which is, in my opinion, it's inevitable. You have the rich. Get out of here. Get out of your fig tree. You have arguably the most innovative company in the entire world building the future as we speak. Like they started the EV move and look, there are EVs all over the road. Now they're not starting the robotics move, but I mean, they're going to be selling Optimus by the end of the year. They're discontinuing the Model S and the Model X with Optimus factories, and they're going to start selling it by the end of the year. That's what Elon said. Is it going to be the end of 2026? Probably not. Elon's not really too good at estimates, but you're not buying Tesla because you think they're going to make it by the end of the year, or because you think they're going to turn profitability again at the end of the year, whatever it is. You're buying Tesla for the future. It's a bet in the future. That's all that Tesla is. And if you're buying for any other reason, it's probably a trade. But I mean, you can't expect to look at a report like this and for the stock to be up 10% because Elon does not release new product news over earnings call. I was actually surprised yesterday that he mentioned the Optimus stuff, but he's actually talked about that earlier on. But yeah, no, it's like these earnings for Tesla, like it always ends up being like an option selling event. Like today, actually, I'm kind of surprised it's down like 3%, but arguably, if you bought options at Tesla, you need a much bigger move than that. What's going on, Samorth? It's all good, dude. It'll always be available on the recordings on the Wolf YouTube channel. So appreciate all 60 people on the Wolf Financial channel. Man, we are killing it over here. Holy cow. It's a lot of people to be on here. If you're on the Twitter, go ahead and join the youtube.com/@Wolf Financial. That's where we're posting a lot of streams, a lot of extra content on there as well, a lot of shorts. And you can also interact, but you can also support us by signing onto the YouTube rather than the X. Like and subscribe to the video, guys. Really appreciate all of you. All right, so let's get into the next segment, ServiceNow. ServiceNow had earnings yesterday, which were still pretty good, right? So I'm going to pull up the actually, I'm going to play a clip for you guys right now. It's from Jim Cramer. He talked to Bill McDermott, who's the CEO of ServiceNow. And I'm going to play this for you real quick, play the whole thing. I'm going to, that is not the clip that I wanted to play. Where is, I think I copied and pasted the wrong one. Hold on a second. Let me just bring this up real quick. Here it is. Yeah, this is a 10-minute clip. I'm not going to play this whole thing, but I'll play as much as I can.
Paint because Wall Street's terrified they're going to be steamrolled by generative AI platforms that are very good at writing code.
Always, how you doing?
I am doing well, thanks, and it looks like you are too. You beat on every key line. I want to start with these numbers that you turned in tonight because I've got to say they look very strong overall. I'd like to know how it's happening. What are you doing?
Jim, you know, this is the fastest company in enterprise software to ever hit $1 billion, $5 billion, $10 billion, and now $15 billion plus organically. We have a once-in-a-generation platform. We closed the year exceeding Q4 expectations in full year, and we're operating at the rule of 55, meaning we're growing revenue more than 20% and free cash flow margin more than 35, and we actually upped that to the rule of 57 company this year. And basically, you know, we're in an agentic AI universe, and companies today want a platform where they can fundamentally reinvent their business model. That platform has to work with the language models, the hyperscalers, the data lakes, and all the systems of record to compose a masterpiece. And we put that together, and we're winning.
All right, so Bill, I hear you. I now have to address the stock. You know I'm a stock guy. You are an enterprise software guy. Stock down 100 points from its high. Highly unusual. People are telling me this is because that AI, so-called AI, is eating software, or that customers can build their own software now. I know I've been building software with Anthropic, and that's hurting your business.
Yeah, that is, again, not true.
Okay.
And I'm very excited to tell you that not only is that thesis not in line with reality, but the contrary opinion is actually where the market is. Today, we announced a partnership with Anthropic, and I think Dario at Anthropic said it best, so I'll just quote him. There's a meaningful difference between giving enterprises access to an AI model and building that model into workflows where real decisions are made. So we already have partnerships with OpenAI and Anthropic. And again, if you remember, Jim, the world was going to change when there were hyperscalers and software companies were going to disappear. And now it's the language models. Actually, we're harmonious with the language models. It's synchronous with business process reinvention, and we're leading the way. What I do see is I see feature companies and perhaps some functional companies actually being eaten by AI because we're becoming the great consolidator, meaning that these features and function companies are actually being consolidated into ServiceNow as we connect all of the workflow and the data fabric of these great companies so they can improve their return on invested capital. AI doesn't pay.
All right, so he does a lot of talking over there. The guy's a great salesman. I've watched multiple interviews with Bill McDermott. I am bullish ServiceNow, but I do not own a position in ServiceNow. I sold like around the 180s or something after this one. Actually, no, I think it was like 170. I don't know. That's not important. The important part is that software is dead. No, just kidding around. Software is not dead. I definitely don't think it's dead, but the market certainly thinks so. And the market is always right 100% time at the given moment. Right now, the market does not like software stocks. So we'll see what happens. What's causing today's bleeding? I believe it's the news that that the U.S. is going to attack Iran. Also, you have bad news about the government shutdown this weekend. I don't think the shutdown is going to happen. I think they're going to do whatever they can to avert it. We'll see. But also, you have was the second or third largest company in the entire world, down 12%. So that's going to affect the stock market. It's a lot of fear. We'll see. We'll see. It's a lot of fear. It's under 100. Let's see actually now where ServiceNow is trading at. Man, this market is just chopping around right now. ServiceNow is $114. Man, I want to buy this so bad, but I just can't. I can't buy it. I cannot. I'll probably miss the bottom, but that's fine. I will get into ServiceNow, but I will not get into it today, guys. This is a nasty chart. I mean, it's not that much. Well, that's a 13% move to go under $100, so we'll see. Yeah, I'm not buying ServiceNow. I'm not buying Bitcoin. I'm not buying a lot of these weak stuff in the market right now. I'm not buying Robinhood. I already have Robinhood position. I know needs to buy. Robinhood is cleanly below the 200-day moving average now. So everyone who talked about the 200-day moving average in Robinhood, well, there you go. It's It's now down below it. IBM did good in its earnings yesterday. Orbs is up 13% today. It's because they're supposed to be having some sort of partnership. I forgot what the name of the company. LRCX is up 2% today. So those manufacturing companies continue to rip people's faces off. Meta's back 10% plus today, which is really good. Nvidia's flat in the day. Like, I don't know. This doesn't look bearish to me. This does not look bearish to me at all. So yeah, we'll see what happens with ServiceNow. I wanted to pull up this earnings snapshot from Brad Friedman, or Stock Market Nerd. Yes, I bought Zeta today. I bought more Zeta today. I actually bought calls that expire in March, the March $20 calls, $20 strike calls for $1.90. And I added more to my position. No problem doing that. Can it go lower? Probably, but it's a core position of mine, so I'm not going to be selling. Who? I don't know. I don't even know what you're talking about. If I say anything bad about someone, like, I'm not being mean. I'm just kidding around most of the time. Oh, see, doing the opposite of Kramer pays big. Yeah, I mean, honestly, Kramer's a legend. I mean, like, you guys, like, just look at what happened recently, but Kramer has been like the face of financial markets for decades, right? And he's had amazing calls. The problem is that there's someone sitting behind him that's telling him what to say on the screen and what he can say. And unfortunately, those are the people who are wrong. I'm not saying Kramer's right all the time, but like, Kramer's a freaking legend, guys. Don't dunk on Kramer. Like, I always joke around saying like inverse Kramer, whatever, but like, I would never, like, in reality, like, Kramer's a freaking legend. You got to give the guy, he's the one who basically turned financial media into something exciting to watch. And here we are today, decades later. I'm doing the same thing, right? I'm making it fun for you guys. At least I'm trying to make it fun for you guys with my crappy jokes. But yeah, no, Kramer's a good guy. All right, so over here, I mean, these are greens. These are greens across the board, except for the gross profit margin, but that's fine. That's only missing by 30 basis points. But yeah, I mean, revenue grew 20.6% at a CAGR 20. So for the last 2 years, they've basically been growing at 21%. That's phenomenal. That is a phenomenal growth for ServiceNow. Their operating margin grew, right? Their operating income grew. Their operating margin grew. Their free cash flow grew as well. Bill McDermott, I just saw this post right here. Bill McDermott pressed the button with ServiceNow. He made a $20 million purchase. And he pledges to stay in the company until 2030. So that's probably nothing. I can sit here and give you every reason to buy ServiceNow, every reason, but I can't buy these charts. Like, these are just terrible charts. I want to see some work off of this chart. I want to see some meaningful recovery before I buy ServiceNow heavy. And I could have bought it here and been like, this is the bottom, and look where we are today. Could have bought here and been like, that's the bottom, and look where we are today. Could have bought here and said that's the bottom. You'd be right for a minute. Above the 20-day moving average, that's bottom. So like, I would feel more comfortable if let me look back here. Let me look back here, right? Let me get rid of the EMAs, right? So if I saw this happen, I think I sold around here, or maybe around here or something like that, somewhere around this 190 level. You know what? Let me actually double check. I'm going to check something on my end real quick, see when I sold out of ServiceNow. It's probably not that important because it is what it is, but I'm actually just curious myself when I sold out of ServiceNow. I'm no longer in path either. I stopped myself at a path of $14, and I kind of regretted it for a minute, but now I don't regret it at all. I sold out of ServiceNow at $171. When was that? December 9. Oh yeah, wow, I got lucky here. I sold ServiceNow here, right here. I forgot what happened on this day, but I avoided that. And now, why did I sell it? I should have sold it here, or at least when it broke and rejected the 200-day moving average, but you can't really get everything right. But I did sell it here because the volume, it was going up, but it was going up in low volume. So it wasn't really a good indicator. But also, this was around the time when the market was going down, and I was adding more to my Zeta position, adding more to my on semiconductor position, and adding strategically to my Amcor position, and so on. So, you know, it was the better bet in the long run. Like, you can't, I don't know. It's just the strategy has changed, guys. And there's more than a few people to thank for that. But the strategy has changed, and it's working for me. It really is working for me. And I'm not in ServiceNow right now. Haven't been for some time. How much did I save myself by getting out there? Wow, I avoided a 33% drawdown. Yeah. But it is what it is, guys. It is what it is. This is actually, let me share this screen real quick. Kind of give you guys an idea of some purchasing that I've done lately. And you don't need to follow me on Savvy Trader. I'm just showing you just because I like to give myself some accountability on here. Yeah, that's my bottom calling for Adobe, and I was dead wrong on that one. ServiceNow here, $171 sold. This is when I first purchased Path, and yeah, I basically got out of break even. I should have gotten out earlier. I actually added more here, unfortunately. We all make mistakes and stuff, and I added more here, and it's like, okay, well, this is not going to happen. So I basically sold out of it. Did a little bit of a Path trade and so on. But yeah, got out of Adobe at $304. Got out of Path at $14. Purchased more Zeta today. And yeah, had a trading position on CRML. We'll see what happens to that one. But yeah, what thoughts on Snow? I don't think Snow is a solid. Actually, yeah, okay. So if you have a profitable company, wow, Snow is down 10% today. That's crazy. Didn't think that was going to happen. Under $200 again. This is a terrible looking chart. So look over here. This is why the moving averages matter. Broke the 100-day moving average, came back right here, can't get above it, can't get above it, boom, down, right? Broke the 200-day moving average, came back up, can't stay above it. This is like a make or break situation right here, make or break, but arguably the trend is down, so it's going to continue the trend, boom, right? So the chart's telling you what to look at, guys. Got to keep a look at the charts. Very important things to look at. I want to look at Amazon real quick. Okay, Amazon's been pretty good today. Meta, yeah, Meta was kind of a make or break yesterday, and fortunately, it looks pretty good. It did good, but this is a make. Yesterday, this is a make or break, right? So we rejected the 200-day moving average before and came back down, and then it broke up on pretty decent volume and actually had a lot of volume into the earnings yesterday. So this is, I would like when it comes to something like this, I wouldn't just immediately sell if I had strong conviction in it. But over here, Meta's kind of been like, consolidating, right? So it's a lot different from looking at a ServiceNow, because ServiceNow was not consolidating when it came back up. ServiceNow was still in a downtrend. So there's a lot more factors to look at there. Yeah, we'll see what happens with that. What about Grab? Grab, I am a bag holder. I am a Grab bag holder. Yep. There's no successful red day without Grab being down, that's for sure. But I'm a bag holder, Grab. Not too bad. I'm still green in my position, but like clearly it's just not doing as well. I was adding Grab down here. So I got a low cost basis on there to keep me in. But I'm going to hold this, and if I lose 3% of my portfolio, so be it. I think, yeah, it's around 3% of portfolio. Rubric, bag holder. What do I think of it? Great company, but software is just SHIT right now. I should just, no, I'm going to have to hold on to this one. It is what it is. Can't win them all. But, I mean, it's fine because other things are doing great in the portfolio. Definitely look at the greener skies. Is this dip viable today? I think it is. It looks like the dip is viable today. But we're going to know tomorrow. We're going to know in about an hour whether it's a viable dip, because Apple reports at 12:30. Can I explain the mode? I've had so many videos on Zeta. Basically, they're a marketing platform with multiple verticals in their system. CTV or connected TV, which they basically sell ad space to some of their clients from other platforms to put their ads on there. They have marketing campaigns that they delegate or that they give based on data they've been collecting for the last 10 years. And that data is first party. They've been collecting themselves. They don't need to pay anyone for the data. And they're also ahead because they're building an LLM called Athena, kind of a three-part LLM. You have your data collection on the first party level. You also have your aggregation of that data on the back end. And then you have the front end, which is basically a chatbot, Athena, that basically communicates looking at the real data that they have from those specific clients and tells the clients like any type of campaigns that are specifically catered to them, that and exactly how much it would save them. There's so much more about it, but overall, they are accelerating revenue and guiding for 35% growth in revenue, which is always a good thing to see. They're expanding, they're inflecting profitability likely next quarter. You know, the two things I keep telling you, and they're also part of a major secular theme with AI, right? So generative engine optimization versus SEO, search engine optimization. So, you know, they're in that too. Yeah, I've talked about this many times, but yeah, SoFi reporting on a bad day. SoFi, well, it reports tomorrow. We'll see if it's still a bad day tomorrow. That really depends. We'll see what happens with that. But yeah, so market's not looking the best today, but we will see. I mean, we're bound to have a red day at some point, and that red day is today. So rare earth selling like there is no tomorrow today. Let me pull up this. So Reuters came out and said that Trump administration is backing away from minimum price guarantees for U.S. critical mineral projects, rare earth getting hit after hours. And it was pretty nasty after hours yesterday. And they are trading even lower today. Rare earth is trading lower today, even though the CEO of, well, I don't know if this is CEO, but MP Materials did release this entire thread. Well, they released part of it. So after they released, they basically said that Reuters is fake news. And you guys can go ahead and check this out. This link, if you want to take a look at that one. They remain fully aligned, backed by the government and so on. So like they're basically calling it false. Update, Reuters now has stealth edited the story to add pretty crucial data. This shift does not affect MP's floor price, with the government has agreed to less chat. Okay, so yeah, the shift does not affect MP's price floor. Okay, so Reuters is backing out. Reuters has now updated the story again, said it didn't actually imply the thing the whole article implied. Wow, so Reuters is backtracking, right? So Reuters is definitely gaining a lot of heat of it. So what's more bullish? CRML, UUUU. I don't know why LEU is part of this, but that's Stock Talks thing. Or MP, right? So MP is the least down out of all of them. What's going to happen there? We'll see. You're going to have to ask Stock Talk Weekly, and I think he's in Stocks and Spaces right now, so he probably has a lot to comment in there. I'm probably going to jump on there afterwards today. After the stream, so we'll see that's that. But yeah, that's the most input I could provide on this one. Just a trade for me, and yeah, Stock Talk said publicly he's in that one. So you know, I would ask him for more information on that one. Next thing I want to talk about is memory and analog chips reporting after hours today. Going to be a very, very interesting day after hours today. We have this right here. Big earnings after hours today. We have Apple, Visa, Western Digital, SanDisk, KLAC, and a bunch of other companies. So SanDisk is reporting earnings today. I gotta be honest, guys. It's crazy that this stock does not stop going up, right? If you look at the chart for this, do they have the chart in here? All right, let me actually pull the chart for SanDisk on the side. Yeah, this is green today, right? So I am not shorting this thing coming to earnings. Like that is just crazy. Like honestly, SanDisk could be up like 20% tomorrow. Like who knows? And apparently this is still cheap on a forward basis. So is Micron, still cheap on a forward basis. It does, you know, honestly, this is a crazy move. This is like seriously a crazy move. It's up 1,000% in less than a year. 1,000% year to date. It's 120% year to date. Like I just don't do yourself a favor, unless you have a very strong thesis, do not short this thing coming into earnings. Like I'm telling you from experience. I did a stupid move with Micron before their last earnings, and I lost like 10%. You know, it is what it is. But yeah, I would not short this thing in earnings. Like even like Western Digital, like you do not want to short these guys into earnings. Like these are parabolic charts, right? Don't short these into earnings. At least like when I tried to short Micron into earnings, like it was like this, right? But like I would not short if earnings were today. Like no way. I don't have a death wish. We'll see what happens. Oh, the Qs are kind of recovering a little bit into the close. Amazon is almost at 241. Good news. Good. I'm bullish Amazon to earnings. Let's go. Let us go. Yeah, so they report earnings today. We'll see what happens. I'm not going to be broadcasting these earnings today. There's more than a few streams that are probably going to be doing that besides myself. Let's go back to the earnings chart. Let's see what their estimates are. So we have $2.68 billion just for this quarter alone for SanDisk. They're supposed to be coming in $3.43. So any beat of that and guidance is going to really propel the stock up. Like I think the bar is set pretty low in this one. The last earnings they went up 15%. So we'll see that. They were actually red the last earnings before the earnings, and then today they're actually green. So we'll see what happens with that one. But yeah, I think the bar is set pretty low. But you know, I would say that if they say anything bad in the call that has to do with demand, it's going to come down, right? So don't just I don't know. Like I would your guess is as good as mine. I'm not a memory expert. What I can tell you is that we're hearing from Samsung, SanDisk, Western Digital, Seagate, Micron, SK Hynix, the biggest players of memory, that they are memory constrained. You got confirmation from Elon Musk that memory is the bottleneck right now with chips. And that is the reason why it continues to propel upward. What program is that? It is Earning Hub, sir. Earnings Hub. This is the link to Earnings Hub. If you want to check it out, I don't have a promo code. I should actually give you a promo code, if anything. Hold on a second. Oh, I'm not part of the affiliate program. All right, it's all good. Earnings Hub. Tell Hamid I said what up. Hamid is the CEO and founder of Earnings Hub and Savvy Trader. So tell Hamid your boy Samsolid said what's up, and go ahead and sign up, guys. Free service. You can get the pro to get. This is an advertising campaign for the show. So, but I still recommend. I use it all the time. So go ahead and check it out. It's free. You just need to sign up for an account. All right, so that about does it, guys. Earnings are coming up after close today. Again, I'm not streaming the earnings, but I'm going to be on Stocks and Spaces after this, and we will see what happens. I'm actually very curious to see how the market's going to end up into the close, because we are ripping into the close right now. Like we are seriously ripping into the close, and that's good news. That's good news for the stock market. Good news for growth stock investors. I guess Microsoft's recovering a little bit over here, but like we'll see. I mean, the market looks very healthy right now. It doesn't look bad at all. 50 billion? Let's check this out. I didn't see 50 billion. I saw, by the way, guys, I have Amazon calls for next week. Expires the day before earnings, but I also have Amazon calls for March. Not a play, not financial advice. I'm just letting you know what I'm doing. Small position. It's like 50 basis points or something. But if that thing runs, it'll do very well. And Amazon is about 20% of my portfolio. Wow. Amazon is investing as much as $50 billion in OpenAI. Crazy cats. Yep. I mean, I don't know if that's confirmed or not, but that's what sources say. Wall Street Journal. Okay, Wall Street Journal doesn't really lie, or they don't really lie that much, but I doubt they're lying about this. Probably a credible source that told them that one. We will see what happens, guys. Till the next one. Appreciate you, all 72 of you. If you are on Twitter, show us some love at the Wolf Financial YouTube channel right there below. Thank you for tuning in. Hopefully we have green skies tomorrow and we see the market at new all-time highs, including the Qs. Let's follow that good trend, guys. Take care.